working well, the audio and the video, and comment in the chat how you're doing today. How are you feeling? There's been a little bit I've seen today after the long Labor Day weekend. There's been a lack of participation. There's been a lot of people not really engaged with this market sell-off. Maybe they're still hungover. I don't know, but volatility spiking here. Markets coming down. September seasonality is in full swing. Tesla is the only stock that is holding the fort. It's up over 18 basis points right now. Everything else is down. Google down 3%, Netflix down 3%, AMD's down 6.5%, Amazon, Microsoft, Meta down over 1.5% on the day. Apple down over 2.3%. And this right here is our current sort of market snapshot where once again, you'll notice the NASDAQ is in a pullback, down a little bit over 7% from its all-time highs. So this is the red candle that we are seeing. You can see that 7.6% is the overall sell-off for the NASDAQ composite. And if you come over to the NASDAQ 100, this is the incredible sell-off that we're witnessing. It's down a little bit more, 7.6% down from its all-time highs. And S&P 500 is also seeing a pretty brutal red candle, down over 2% now from its all-time highs. And of course, not to mention volatility is moving higher, hitting a new high of day, 18.71, up over 20% right now. So yeah, just wanted to go live for a little bit. Not going to spend too much time here because we do have a very important market update in about a couple hours that I need to post. We've also got Zscaler reporting their earnings later today after the bell. But this has been a bit of a double top for the S&P 500, something that we discussed in our previous updates. We were mostly consolidating sideways here in that range. And I would argue that we are still well within that range for the S&P. And if you do get a breakdown below this level, then there's possibility for us to see lower lows and again continue to sell off further. But we'll discuss that in our market update. But this has been quite an interesting sell-off. Who can guess what is the total sell-off for the S&P 500? What is the number that we're seeing for the total sell-off in the S&P 500? God, we've got 56 people watching right now and only 3 comments in the live chat. What is going on? Why is everybody so quiet today? Why is everybody nobody's talking in the chat? I don't understand. The sell-off is really scaring people for I don't know for what reason. You got so either you guys are shy today or you guys are just quiet. I don't know what's going on. I have nobody to talk to. Literally nobody's even asking questions. Caddy, what is your opinion on the energy sector in its current state? So I think oil is coming down aggressively. So you can see that it's down over 5%, which is really resulting in this liquidity kind of leaving, the energy market. So you'll notice that we're down over 5%, $70 a barrel. And then of course, it's causing an entire sell-off in the energy sector as well. Okay, so now we've got some comments coming in. Work day Tuesday, so I understand, everybody's busy at work. I totally get that. And Eric says 310 billion. So over $700 billion has left the S&P 500 today. Of that, over $400 billion has come from Magnificent 7 alone. So Magnificent 7 accounting for over 60% of this sell-off for the day today. Again, we'll cover all of that in our market update. Let's see. Sorry, I was out nibbling on the dip. Okay, that's good to go. That's good to know. Good time to invest. Options 1 month out. So it depends. Abhimanyu, are you looking to buy or sell? That's going to be the real question here. Are you looking to buy or sell the options 1 month out? What is the plan there? Jazz, Nvidia, did you call it a buy? So for me, fair value sits at sub $100. As you already know, that closer to, I think, 80 to 90 bucks is where I believe the fair value is. But I also don't mind selling puts, which I already do have on Nvidia. So we'll see where it actually ends up closing on Friday. But my strike put is $108. We're actually very close to being in the money for those puts. And if I do get assigned, I don't mind. I actually will go ahead and turn those calls, sell those calls for the following week. And again, the premiums are pretty solid, unless, of course, Nvidia drops a lot in a very short period of time, is when I'll end up actually holding on to an unrealized loss. But right now, $108 strike is still a little bit away, but I would not be surprised if you actually end up being in the money by Friday, considering the brutal start to the week here, down over 8%. Okay. The market looks like 3-0 game, if you know what I mean. I'm in shock. Free Indeed says the seller will continue to till about the 14th or 15th of September, with swings up and down and the worst to come by the 15th. So that's a fair analysis because, again, September historically has been one of the worst months, and it's really towards the end of the month is when we actually see that accelerated selling pressure. I don't know if I have the analysis with regards to... So this is just the September of last 13 years, where the average and median volatility has been is about 25 on average. Median is over 20, and we're kind of on par to getting up to almost 20 here on the VIX. 18.78, hitting a new high of day, with of course the markets here making a new low. I mean, S&P 500 is now down over 1.6%, hitting a new low of day, 554.36, and the Nasdaq 100 at 464.37. We're still making a low of day. We're down 2.5% now. And usually it's like during these sell-offs, we actually get some buyers to step in intraday. Like we do see a power hour rally, or we see like an post-lunch rally for the market, but nothing, absolutely nothing. There's no buyers. There's no bids. The selling pressure is just way too much for us to keep hitting a new low of day. And this is at 2 p.m. Eastern, like 2 hours prior to market close, and there are absolutely zero signs of any intraday reversals at all. This is why it's been quite an interesting day today. We haven't seen any bids. I mean, we've barely seen any green candles. Waiting for some deep around 800, 750 or ASML before creating a position. Hello from France. Also, Alexander, thank you so much for joining. And yes, ASML, one of the best companies in my opinion for semiconductors. Long-term, very strong potential there. But yes, at lower levels, lower prices, it would make a lot more sense. Tesla's strong. Well, it was strong. It's now back in the negative, back down. And I think, if anything, we might see an accelerated sell-off towards the close for the market. So NVIDIA down 8% today, 8.2%. It's just incredible. Incredible amounts of selling pressure here. Who would have thought? Who would have thought one day it would wipe off over $220 billion in market cap? Just incredible. Take a look at the S&P. It doesn't look very good. It does not look very good at all. By the way, PMI manufacturing index numbers came out, and that's one of the things that Wall Street would like to do, is they would like to connect the dots for us and explain why the markets are selling off the way they are. They say U.S. factories remained in a slowdown mode in August, fueling fears about where the economy is headed. The Institute of Supply Management, so ISM, monthly survey for Purchasing Managers Index, so PMI, showed a just 47.2% reported expansion during the month, which was below the 50% threshold, as I mentioned earlier, which is the 50% threshold for break-even point for activity. Though that was slightly above the 46.8% recorded in July, it was below the Dow Jones consensus of 47.9%. While still in contraction territory, U.S. manufacturing activity contracted slower compared to last month. Demand continues to be weak, output declined, and input stayed accommodative. This was Timothy Fiore, chief economist, ISM Manufacturing Business Survey Committee. And demand remains subdued as companies show unwillingness to invest in capital and inventory due to current federal monetary policy and election uncertainty. And while the index levels suggest contraction in manufacturing sector, Fiore pointed out that any reading above 42.5% generally points to expansion across the broader economy. But this, again, is not looking super great because we are seeing contraction, and this is only accelerating those fears for recessionary fears, right? Yarman says we don't buy because yesterday you told us Tuesday would be red. Yes, this week it's not looking good. I mean, look at NVIDIA down over 8.6%. What is going on? This has been such a slow and steady bleed on the day. We've got NASDAQ now down over 2.6. Look at that massive candle coming in for S&P 500. You know what I really need? We still have 184 people watching, and I'm still not happy with the level of engagement here because, this is a pretty insane day. and people are still quiet in the chat, I'm really going to blow up these charts. Like, look at that sell-off, you guys. Like, I'm going to go over to the daily candle. Look at that sell-off. This is the daily candle. That's what I'm going to do so that you can actually see it and get more excited. But yeah, 1.7%. We're still hitting a new low of day. $553.70. Volatility, we're back up to over 19 now. So we're already past that. Well, actually, we're almost up to the median level. Median figure of 20.5 in the month of September. Going back as far as 13 years. So volatility getting up to over 19. There's a 23% spike. 23% spike in VIX just today. And then, of course, we got the S&P 500 down over 1.7. QQQs are down over 2.6%. What a candle. What a candle. Make sure that you guys drop a like. I would really appreciate that. Gets more people to join our live stream so we can be sad together or be excited together, I would say. SMH down almost 7%. Brutal. A lot of that's coming from Nvidia. Good time to sell a put on end phase. I would wait just a few more days. Again, it really depends on where you're comfortable buying. So I guess it could make sense because end phase is down quite a bit today. So, down over 6.5%. I would wait for it to be a little bit lower, closer to $109, where you can start selling puts down in the low 100s or even sub $100. I think that would be a pretty good level to keep in mind. Stefan, where are we in the Money Vest Index? I'll be breaking that down in our market update after the market's closed. So I'll update everything, the technical breakdown, the valuations, the macros, the Money Vest Index, volatility, percentiles. Everything is going to be discussed in our market update from later today. And we will talk about that. Mark says you got to do a surprise shocked face in the thumbnail and say something along the lines of the fall of the U.S. economy. Oh man, maybe I should. That's the YouTube game. That's how you get people to click on the videos, right? I mean, it's the YouTube way. Will there be more sell-off? Looking for some long-term stocks. So I believe there could be some more pain in this market. We talked about the seasonality. We talked about the fact that towards the end of September, early October is when the selling pressure accelerates. I've talked about how I think there's going to be some buying opportunities getting, potentially there in the next few weeks here. So we have to be very, very ready to be ready to buy. And I think that's really the whole point, is have a plan in place, figure out what it is that you want to actually dollar cost average into, what kind of stocks, at what prices, and then just execute when the market gives you that opportunity. I'm still keeping a close eye on the Money Vest Index, volatility, percentiles for different metrics that we like to track. This right here is just a whole market breadth breakdown. So it's really not that complicated. We want to keep things very simple, and we want to cut out all the noise and really focus on what really matters. There's few set indicators and metrics that we want to keep track of. And once they are flashing green, once they're actually suggesting for us to start buying again, such as the Money Vest dashboard that we have here, then we can actually start deploying capital into the market. So it's really not that complicated, keeping it very simple. And for those reasons I mentioned that, raise your capital, raise your cash exposure so you can actually take advantage of those buying opportunities. So we're seeing that. And again, Tom Lee's also on board with the seasonality effect of September, October not being the best months. And that's what we're seeing from the markets. Tesla's also red now, down over 0.5%. The only stock that was green among Magnificent 7 is now also red. And if you come over to the market concentration spreadsheet, something that we have also discussed in our previous videos. Before I show you guys, take a guess. How much is Magnificent 7 down collectively? And I want to hear from all 200 people watching this live stream. I want to hear 200 guesses. How much you think is Magnificent 7 down on the day collectively? We're talking in terms of market cap. How much you think Magnificent 7, so Nvidia, Microsoft, Apple, Amazon, Google, Tesla, they're all combined. How much do you think they're down on the day? We're talking market cap. How many hundreds of billions of dollars you think they're down? Oh man, Nvidia is really going to put me in the money in just one day here. Okay, Calvin says 1.5 trillion. 2 billion, 400 billion, 450 billion, 600 billion, 1 trillion, 1 trillion, a lot of 1 trillions, 300 billion, 500 billion, 300 trillion, 2 trillion. Wow, there's a lot of trillions. So let's see who's going to get closest. I want to hear a few more people. 500 billion, 600 billion. Let's see, we got 500 billion, 300 billion. Let's come over to our spreadsheet here. And we are, for the Magnificent Seven, collectively down over $500 billion. So the sell-off, folks, for Magnificent Seven is $519 billion. So Razma Tasuk, 500 billion. Your guess was right. Shrikant, 500 billion. You were right. Yeah, that's about it. A couple people expecting 500 billion. And there it is, 519 billion. For the entire S&P 500 now. For the entire S&P 500, what do you guys think? For the entire S&P 500, what's the sell-off you guys think? We're down about 1.8%, so almost 2%. What do you think is going to be for the entire S&P 500, the sell-off for today? I was $100 billion off, but that's kind of wild. So now guess for S&P 500. S&P 500, what is your estimate for how much the S&P 500, how much money left the markets today for S&P 500? Okay, we got 3 trillion, 2 trillion, 1 trillion, 700 billion, 700 billion, 1 trillion, 900 billion. I want to hear some more numbers, folks. Germany's GDP, 750 billion, 800 billion, 800 billion. It's more than my country's GDP, 750 billion. Let's see. We want to hear more people talk about it. We want to hear more people take a guess of how much it is that the S&P 500 is down. 1.2 trillion, 2.3. GDP of India, no, probably not that high. 1 trillion, 900 billion. Okay, so drum roll, please. For the S&P 500, we are down collectively over $889 billion. So we're down on the S&P 500 almost $900 billion. Wow, 2 for 2. Razmatsuk got it twice right in a row. Incredible. Shrikant, 800 billion. So you were off by just a little bit, but that's crazy. Yes. 900, almost 900 billion down. 58% of that coming from Iceman also. I feel like, no, well, Iceman, you got 1.2 trillion. Well, you had a couple guesses. You can't have two guesses and then be like, yeah, I was right on one of them. But yeah, 889 billion. 58% of that coming from Magnificent Seven companies, which is $519 billion. And that's where we are. 2 hours prior to market close. Nvidia. Oh man, Nvidia is not giving me that confidence here that it's going to close out of the money. Most likely not, because it's very, very close to being in the money now. And yes, I'm going to get assigned quite a few shares here by Friday if we don't see any type of reversals coming in rest of the week. But yeah, I need the total S&P 550 trillion, so nearly 2% down makes it around that number. Correct. 890 billion or something. That's only half the money of this portfolio. Oh man, I wish. I haven't even looked at my portfolio today. I haven't even looked at how much I'm down. Probably like 20, 25, 30 maybe. Something around that. Market's tanking, caddy. Yeah. It's looking pretty bad. Tesla 212.22. Yep, selling pressure accelerating there. Caddy going to have 600 Nvidia shares. Yes. Most likely by Friday. But then I'll be looking at selling some calls at 109, 110 strikes. See how much I can generate. I think it should be enough. If what we're getting for call premiums today at close to the money remain the same at 108. When I do get assigned, then I can expect to make anywhere from $2,000 to $3,000 for the next week. If I get assigned and NVIDIA kind of stays in and around that $800 and $809 a share. If for whatever reason I get assigned at 108 and NVIDIA gets a bit of a rally back up to 109 or 110, I'll be looking to get rid of those shares and sell puts again. The only sort of risk that I'm facing right now is, well, still good for long term. You're absolutely right. I think I don't mind holding for the long term anyway. But this is strictly for options only, so I don't want to hold on to NVIDIA shares in an options portfolio. So if I do get assigned, the worst case scenario is that NVIDIA tanks another 20-30%, takes out another $400-500 billion market cap, and then I've got like a unrealized loss of about $4,000 or $5,000 on my 600 assigned shares. So that's the only risk. And honestly, I didn't expect NVIDIA to be down over 8% in just one day, because the volatility was actually not even suggesting almost a 9% sell-off on the day today. But this has just been such a slow and steady bleed. It's not like you saw a significant sell-off in the first 2 hours and then the market's kind of getting bought back in. But there's been no bids. And that's speaking volumes to how much weakness there's been in the markets. Like, there's been no buyers at all. And if you take a look at the volume, we're 306 million shares versus the average 30-day volume of 362. If you come over to Tesla, we're 56 million versus average 30-day volume of 81 million. We've only got about 2 hours left to market close. So I think today is going to be one of those days where the volume is lower. And this has been very much a slow and steady bleed for the entire day. I think it's just been kind of drifting lower and lower. And we're still at the low of day. Like, NASDAQ has not been able to find any buyers all day. There's been just straight up support. Iceman says NVIDIA $108.01 or 10 cents by Friday. Man, if you're right, if you're actually right, oh God, I'll give you a free coupon to my courses. How about that? Because it would be wild. I think the buyers are going to be pissed if NVIDIA ends up at over $108 by Friday. I think it's going to be tough. I don't think it's going to happen. It's already 85 cents off. I might as well just be in the money already today. It doesn't even have to wait till Friday. I think I might already be in the money because it's so close. Yeah, might test again around $88. That would be wild. Yeah, $108.94. So it's just under $109 right now. Alistair says, Caddy, you're getting assigned. Of course I'm getting assigned. I've already mentally prepared for assignment now at this point, because we're so close to being in the money. Like 9% down day in just one day. Come on. Shrikant says, my NVIDIA strike is $22. Yeah, it might go lower before Friday, no doubt about it. I think it might be in the low 100s if the selling pressure doesn't exhaust itself. I mean, if there's no buyers that step in, tomorrow or Wednesday, then easily, like Magnificent 7, technology in general, I mean, this sell-off can really accelerate further. 7 to 10%, as what Tom Lee's mentioned, is possible, no doubt about it. So if NVIDIA is below $108 today, does it get assigned today, or it'll wait till Friday? So most likely Friday. It really comes down to the buyer if they want to exercise their right to sell those shares, and then I'll be the one buying them. So $108 is going to put us down, I think, over 24% from all-time highs. Look at that candle. Look at that candle here. We're already down 22%, and $108 is going to be 23% down from all-time highs. Yep, Anish says $100, below $100, I'm all in, bought at $129. My NVIDIA, $920, $107. Yep, so $107 by $920. That's pretty far out in expiration. There's been a lot of insider selling pressure as well, right? There's not a lot of corporate buying. So there's not a big group of investors that are actually going to be helping support the market, because corporate buybacks, we already know that they're kind of running low on cash percentages as a percentage of their total assets. So that's out of the question. Then you've got hedge funds, institutions. They want to wait out a little bit of this uncertainty with the jobs report coming out on Friday. Recession fears kind of elevated once again as the PMI manufacturing index numbers comes in lower than expectations. So there is going to be uncertainty. And if you combine that with September seasonality, you might as well just sit out this market at this moment. That's at least what the hedge funds are thinking right now. And then, of course, they're gonna take advantage of those deals, of those down days to dollar cost average back into the market and start going long again. On August 1st through 5th, the market fell 7%. It's going to be worse than this. Max 7 led it up, but can bring everything down with it. Why don't you sell your stocks now? So then Fong Mike, it becomes a little bit more about timing the market than as opposed to stating the obvious. Like, of course, in hindsight, we can all look at, the markets were down or the markets were selling off. Why didn't we just get out and then buy back at lower prices? But it's not that easy, right? It's obviously time in the market is much better than timing the market, and that's been tested over and over again. You're not going to be able to consistently time the market anyway. So what we like to do is really just look at the risk reward, and if it starts to become more favorable, if a lot of these indicators that we look at, the MoneyVest dashboard, the technical indicators, if they start to flash green, right, which I'm assuming a lot of these will start turning yellow to somewhat green, suggesting for the risk reward getting better. It's improving. And we talked about this in our previous updates and videos as well, that when it flashes green, when there are buying opportunities, take advantage. Don't hold back, take advantage, because we don't get that very often. Now, the problem with this, and that is actually one of the reasons why this concerns me a little bit more, is that this is a very slow and steady bleed, right? It's been an unusual day. If you ask a lot of our members in our Discord, usually what we have seen is, markets sell off first half of the day. We're down 2 hours, 3 hours right after the open. And then power hour tends to be a little bit stronger. Buyers do step in, there's bids coming in. But it's been quite an unusual day today where we have not seen any bids. We have not seen any support whatsoever. We still are hitting it just feels like the market just opened because we're still hitting a new low of day. And there doesn't seem to be any support on low volume, which really just goes to show there's this money absence right now in the market. There's nobody. It kind of feels like markets are dead pretty much because there's low volume, slow and steady bleed lower and lower and lower, and that's what it's been. So yeah, let's take a look at IWM also. Down over 2.8, almost 3%. So even small caps are not finding any relief because recession, affects every single part of the market except for staples and utilities. And that's what's actually going up. So this is a very clear sign from the market that we're getting defensive. That's it. Like this is where the liquidity is going to. It's about as clear as it gets because there's no other explanation to this. Like there's no way to spin this. The data is right in front of you. The numbers are right in front of you. You've got energy down because oil prices are down. And the next sector, or perhaps the only sector that is down 4% and selling off the most, is technology. And, we've been talking about the lack of leadership from technology. We've been talking about the lack of dominance from technology. It's been very, very lackluster. It's been underperforming relative to utilities. I've even shared the chart, which was this, XLK divided by XLU. And you'll notice that occasionally we do see that underperformance. This is the underperformance that we tend to see when markets positioning is shifting from a risk-on to a risk-off environment. And when that happens, investors tend to get a little bit more scared to be risk-on or long tech. And that's what's happening right now. And this is this could last a little bit longer until we get more clarity on where we are with recession fears, unemployment, interest rates, inflation, all the other economic data points. But this right here is the overarching trend where technology continues to lead over longer time frames, but it's just in a short to medium term basis. There's been times when we have seen significant underperformance in tech relative to staples and utilities. And it's the same thing with staples as well. So if you do XLK divided by XLP, again, you'll see a very similar pattern where the overall trend is still very bullish. However, we do see these moments where staples shines relative to technology, which is again very, very common, right? That's just the market's way of repositioning or shifting capital around to becoming more defensive. And why would it want to be defensive? Because of the uncertainty related to whether we see a recession or not. So those are the two sectors, utilities, healthcare is flat, but utilities, staples, and even real estate pushing higher with everything else down, with technology down the most, over 4%. Nvidia is going to be most likely in the money now for me at close to $108, so down over 9% in one day. 9% sell-off, with QQQs down almost 3%, S&P is down over 1.9, almost 2% down, with the entire Magnificent 7 selling off, with AMD down over 7%. Let's come back to our spreadsheet and see how much we're now down. I'll wait for this to reload. $561 billion in Magnificent 7, with, we're closing in at about $1 trillion in losses in the S&P 500, folks. $1 trillion in losses. Who here thinks a $1 trillion loss by the end of close? By the end of close, what does it feel like? What are you guys thinking? Almost $1 trillion in losses for the S&P 500? What do we think? What are we thinking here? $929 billion. What's another $70 billion? Pretty much nothing. Another 1% on S&P. Another 1% on maybe technology, Mag 7. We're there. Oof. Talk about weakness. Here. There's no bids. We're still at low of day. This. I'm not going to lie, but my intuition, this kind of reminds me a little bit of 2022. I got to be honest, because when there's this much weakness all throughout the day, there's no buyers. There's absolutely no buyers. Volume's low, and there's money quite literally absent in the markets right now. SMCI, Ulta, man, those were the two stocks that I was actually considering for this week for selling puts. Would have been a much better decision. The reason why I didn't go with them is because long term I wasn't sure if I'd be comfortable holding on to those two companies. So, Fong Mike, you addressed so many economic indicators towards market sell-offs and recessions. Love that. Thank you so much. Appreciate that. And hopefully that was helpful. And you got a little bit of insight out of that. You think this continues tomorrow? Volatility at 26? No, it's not. 19.6. Rebecca, you got me all worried. I was like, 26, we'd be all the way up here. Yes, we are up 26%, you mean? Okay. I thought you meant volatility at 26. Okay, so you mean 26%. Yes, 26% higher on the day, which is, again, quite a significant spike of its own. And again, we've got lots to cover. We got lots to cover in the market update, because this is literally 1% of what all the data that I really want to go over, because there's a whole lot of spreadsheets, a lot of things that I want to break down in the market update, which we'll talk about in about 2 hours. But yeah, this is the current state of the market. Amazon's back in a correction. Apple's in a pullback. Nvidia's back in a bear market, thanks to the sell-off. We got Tesla back in a bear market, down over 48%. Google's back in a correction, almost in a bear market. Microsoft's in a correction. And we've got Broadcom in a correction. Meta back in a pullback, down almost 6% from its all-time highs. And still no sign of any buyers. Okay, everyone. So that's going to be it for today. Thank you so much for joining in. Really appreciate that. Make sure that you drop a like. A very important update coming out later today for the markets. It's been a very slow and steady bleed, so you don't want to miss out that update as we continue to break down on the NASDAQ. The bulls unfortunately lost. They were not able to hold up to that level at 468, and unfortunately S&P 500 also broke down. So we broke down a big test here for the S&P 500 and the NASDAQ. Both of them broke down support levels. So we are in not a very good shape for rest of the week and rest of September. All of that will break down in the market update. Fong Mike, my name is Karthik, Kartik, as Swapnil wrote. So again, thank you so much. Gold, in my opinion, is worth buying. I've been buying gold for over 2 years and will continue to buy a little bit every so often. So thank you so much for joining. Happy investing. I'll see you all.